music? Let me know if you like the happy music. That's a good way to start the day, isn't it? Life is beautiful. You gotta give it all you got, everything you got to give. Time to shine, time to live. Life is great, life is great, life is good. Life is beautiful. Now you're living out your dream with your hopes up high. Your only limit is the sky. Hey, hey, hey! Yeah, the coffee's good this morning too. Thank you, minions. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Whoop, whoop. So how many people, did you like it? You like I like the message, so let me know if you like the message. I like it, right? Life is great. Life is grand. Life is good. Life is beautiful. Yeah. Top Edge says that ad is funny. I don't even know what. Wow. Yeah, I don't know anything about that. So, anyways, let me. Oh yeah. Hey, my name is Wayne. I'm a chief FX market strategist for TradersWay. We are trying to woo you to our firm. We want to be your broker, and we want you to be hugely successful if possible. And we're doing that in a self-serving way because if you're hugely successful and your trading account keeps growing and growing because you're so unbelievably profitable, you'll trade more and more with us and your lot size will get bigger and bigger and bigger, and the little slim little margins that we make start to add up to being something reasonable. So we thought I should be here every single day to support you and guide you and give you feedback and share ideas and share my 10 or 12 or 200 years worth of experience. Because it might give you an edge on the long run. So that's the grand plan. We're going to invest into you up front, and hopefully you become a huge success. You pay it back perhaps because of loyalty. And boom, the rest is just history. Are you all right with that? I don't want it to be subliminal or subversive or, it's way out there and, never said. I want to bring it out into the light. I want you to succeed. That's why I'm here every day. You may have noticed over the years, I've never taken a day off. So there you go. I'm here for you, babe. Yeah, we do these sessions at 7:30 in the morning, New York time, to get you ready for the open. It's approximately London lunch, which is great. It's midpoint there if you're European. You guys ever trade Asia? Yeah, James, I saw that and I had to delete your like 4 posts. And I didn't delete them, I had to move them to drafts. But you had like the same post 4 times, none of which had images or even content, so I had to kill that. But I'll look into it. I haven't had time. So yeah, so I do like the Asian session. Always have. So I thought maybe one day we could all meet up there. Do something together sometime. But whatever. So that's that. So, oh yeah, I'm here Monday through Thursday. Friday, which I think is tomorrow. Tomorrow we have non-farm payrolls. And you can join me there. That is an open event for everybody. There's usually, 1,000 people registered and usually 600 or 700 attend. So swing on by FX Street. I'm also Forex Speaker of the Year at FX Street, so pretty neat stuff. So thanks to you, life is grand, life is good, life is beautiful. I want to follow up with something that you and I did yesterday. All right, where's my drawing tool? This is on Forex.Today, as you can see on the activity feed. Where's my drawing tool? Too many screens. What a buffoon. Can you guys see my drawing tool anyway? Oh, there it is. Oh, I have to recover. Oh, right. Failure to recover. Do I want to recover the failed recover? No. How about just delete it? All right. All right, so what we did yesterday, I can't remember what pair this is, but I grabbed a screenshot because I just want to point it out. Yesterday, I think we were right here at the New York Open. And yeah, you can see that, right? New York Open right here. And I had set this up as a potential double bottom. We were talking about, counter trend type trades. The trend has obviously been down. What is this, Kiwi yen? Yeah, Kiwi yen. The trend is obviously down, so on and so forth. So it's high risk. But what kind of opportunities do you look for in a higher risk trade, right? Do you guys remember that? And we were just, I was just declaring that it was possibly a double bottom, right? And I said, in that case, you could play it, you could, but keep your stop close, and so on and so forth, right? Then so actually we were about here, right? Because it's basically before New York Open. So we were actually about here at the time, to be specific, right? I think you can see that. So the double bottom, okay, did come down and even gave you a second chance. And by the end of New York, you were up about 80 pips. So that was one plan that you and I put together in real time yesterday. It came down on the Auckland Open and did the roll reversal, which I then posted for you. So this is what post I made here on Forex.Today saying, dude, right? That's what the post said, dude. I mean, this is classic, straightforward, easy peasy setup, right? Let me put a different color here. Magenta? I don't like magenta. Let's do black. I haven't done black in a long time. All right. So you can see I even did the arrows for you. That's what we call a roll reversal. It's the double bottom, higher high, which creates the 1, 2, 3 pattern, and 4 should be a higher high, in fact, right? Right? Now, right? And we even talked about that forming. And usually this high up here is going to be a psych level, a pivot point, but more importantly, a moving average on a higher time frame. So that, I don't know, that could have been the 4-hour 21 or something, right? So anyway, so I post when we get to 3, I say, dude, seriously, look, dude, roll reversal, 3 should be setting up here if it's going to set up. Wake up, hello, right? So that's on Forex.Today, and we are now, so to redraw it, there's the double bottom. Here's yesterday, New York, where I said, hey, get ready. It's going to give you a setup. And then here's yesterday in Asia, where I made the post for you. And it has now done this. So the first wave, you're up about 80 pips, 80 and a half pips. Then it pulled back, and then you went from, let's just call it 72. It actually went down to 71.80. And you'll also see right in here is a cluster. That's a pivot point and a 618 Fibonacci retracement and the roll reversal off of this, right? Daniel, are you here? Yeah. So Daniel and I were trading, and we took a shot here, but the actual trade plan was 71.75 for the long bomb. So anyways, it came down to 71.74. Gee whiz, huh? Thank you, market, to turn within 1 pip of the trade plan, right? Or, so it came down, hit it, and then went from 71.75 to 73, which seems to me is a lot of pips, right? That's 71 pips plus 88 pips. So yeah, so yesterday we had this set up at basically 71 and a half, I guess. Then it went to 72 and a half, and then it almost went to 73. So anyways, and the way that you'd probably break it out if you're not going to swing trade it is yesterday's New York, like I showed you, gave you that many pips. And then, the second move is here for even more. So 72 to 73, and this is basically 71 to 72. So anyways, that's what we talked about yesterday. That's what happened last night on the follow through. Cool. Very nice textbooky stuff. I love it when it just works out perfectly textbook. It's not often, but it can happen, right? So what is the predicted high for the week? Nick, yeah, you probably would treat it similar, but with the downgrade, you are assuming additional risk. But to me, it's not really a Kiwi trade, it's a yen trade. So that's why I'm like, yeah, kind of. Because he says, how similar would Aussie yen be? But so anyways, the target is weekly R1. So 74.50. Craig says 74.44. Yup. 74.44 and a quarter, Greg. We don't accept rounding about here, Greg. Right? Like we say at school. That's what they do at Yale. Yeah, just kind of round it a little bit. But this is Harvard, for crying out loud. If we missed it, can we still enter retracements? And that's kind of what Daniel and I were talking about at the time, too. I'm like, look, we have it set up on, I think the 15-minute at the time was the big setup. And then we were trading it on 1 minute and 5-minute charts in here. And he's like, I missed it. And I took it. And he's like, oh, you got in? And I'm like, yeah, I got in. Yeah, no, I'm up 20 or 30 pips. So, wow, I missed it. Like, missed it? What do you mean you missed it? Right? And he's like, oh, well, it's gone. And I'm like, no. You just set it up. You catch the next pullback. Right? But you never tell yourself you missed it. Because you're like, oh, it did this, now I can never get in. And I'm like, well, it's going to keep coming back, right? Like, it's not that you missed it, the timing of your entry was poor. But your job is always to say, excuse me, is where's the next support? When's the next pullback? And then, of course, you can also drop into the 1 minute and just next cycle. Where's the 5 minute? How about the next cycle? It's not that you missed it. It's that you're going to get the next one. Right? And it's a slight different mental thing that and I'm trying to teach you how you should talk to yourself. Right? Because confidence is such a big part of being a trader. So you never missed it. That sounds negative. Oh, I missed it again, right? No. Oh, it looks like that support's held. I'm going to catch the next dip. Just so happens, Australia was downgraded, right? So I bought it here, Then Australia was downgraded, and then actually hit this. So when we were up here, when Daniel and I were up here, the plan was for it to come down to, and no joke, specifically 71.75. The trade plan had always been up, down, 1, 2, 3, a roll reversal, hammock type stuff. That was always the trade plan. So it's not that you miss it. You're either going to catch it, here or here, or a collapse back to here, and then here. So there's you never miss it. You're just going to get the next one, right? And you see how mentally that's really important. Cool. So good trade plans. Sometimes they work out, right? Sometimes they don't. And I'd like to thank you guys. More and more of you are participating and sharing your ideas, and it's it's really good stuff. I really appreciate it. There's some nice trade plans coming together here. Look at these trade plans. James, that's a beautiful chart. Okay. I mean, it's just really, you guys are doing a really good job. So keep it up. Big thumbs up. Big like. Big like. Thank you guys. All right. So what's going on? Let's do a quick morning report. Okay. Great. European stocks are up. Commodities are up. What? So that's that. And it was funny. Didn't we talk about like, hey, what if that happened? Right? Wasn't that part of the pound yen type stuff? Oh, hey, Guy. Good to see you again, Guy. Yeah, so we were talking yesterday, like, hey, it's a downtrend, but we're setting up a bullish trade plan. It's a little risky. So I said, keep your stop close or cut your lot size. But what if the next day is risk on? Look at boom, the next day is risk on, and that's how you get paid, right? Well, we miss you, Guy. You've been gone too long. So, anyways, French stock market up over 1%. Hong Kong stock market open more than 1%. UK stock market 1%. DAX 2/3 of 1%. Euro stocks 1%. Oil is up 1%. 10-year T-note went from 1.37 to 1.39. Whoa, really? Wow. Oh, do you guys remember maybe 2 weeks ago, I gave you what I thought was unique information that I thought might be useful for future macroeconomic views, or it may even or micro, where I talked about how 300,000 Americans are no longer underwater on their mortgage, but they've reached the break-even point. So maybe now they borrow money to put in their house, now that it's a good investment again, or something, But there's another interesting thing. For those that had, let's say, negative situations back at the beginning of the financial crisis, credit card defaults, I don't know, I don't think personal bankruptcies, but you know, bad financial things because of the crisis, right? Those are going to start coming off credit reports in the next 12 to 24 months, depending on when you stop paying the credit card or whatever, right? Right? Or when they towed your car away because you stopped making your car payments, right? That kind of stuff. Now that negative, so another way of looking at it is credit scores are going to go up significantly in the next 24 months for probably millions of Americans. Which means more Cadillac Escalades, more 70-inch 4K TVs, whoop, 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 where everybody's rich again. Right? Yeah, next crisis. Yeah, but the great thing about being wealthy is you get rich when there's crisis like that. Great. So you might as well be rich if you had to choose. All right, so anyways, there we are. That's that. So we can look around. Oh, I didn't even finish the morning report. Sorry, I get so distracted. I'm just looking through my tradethenews.com feed, blah, 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 blah. Oh, we have ADP this morning, don't we? I don't even have a calendar in front of me. We got the Thursday ADP. You know what came out just recently? So this is all good for my models now. So I can start modeling. So we have ISM services out. We have ADP coming up. And Challenger just came out, but I don't see it here. So let me zip over to this other place. Challenger came out 38.5. 38.5. Okay, so that's part of my discounting mechanism for my employment situation model. So that's neat. That's good stuff. Not bad. It was 30,000 before, year over year, negative 14. It was negative 26. So, you know, I don't know. I mean, it's. I would call it. It's in there. Did you guys get the soybean crop out of Brazil? The crop report, soybean crop report out of Brazil? No. Well, they cut production. Just I don't know if you're trading soybean or soybean meal. So I think yesterday we talked a bit about the crack spread, didn't we? And that's where you trade the difference in the difference in the normal fluctuation of price between soybeans and soybean meal. But whatever. Soybeans just rocked right there. So anyways, going back to NFP, yeah, okay. So it's probably going to be on, you know, you can put your model together. You have enough data, I think. What else going on in the world? Oil inventories, negative 7 million almost. Okay. Now remember, this is the time of year when you get drawdowns. How many people remember where I went to the EIA website, the Energy Information Agency, which is, right? Okay. And I showed you the historical range of inventories over a course of many years, right? And I showed you that starting June 1st, the trend based on decades of data is down. But it's, right? But that's why there was a buildup of oil in the first place, to be prepared So when there's a pickup in demand, we already have supply ready. So it's not like anything significantly changed, and it's just that's what happens in July. It's amazing that people go through life and they don't know these things, right? And you're like, oh my God, it's such big news. I'm like, no, it happens every July. Every July, oil inventories come down. I just want to make sure you know that. Every July. So anyways, that's big. So watch. We're more interested in the potential for change in trend. So like, what's going to happen in September? You know, especially if it's a warm winter and rig counts keep going up. That'll then when we get off trend, it's going to be more interesting news. Okay. So anyways, just yeah. So, Bank of Japan in the Asian session said they'll continue doing QE, but they're not really likely to make a change, or at least they haven't said they would. I mentioned, I don't have it in front of me. Oh, here it is. I mentioned earlier that the S&P, Standard & Poor's, they cut Australia's sovereign outlook to negative from stable. There's still a AAA rating, but the outlook for the country is very negative. So I don't know how many Aussie dollars you want to hold. Okay. So, put that down in your fundamentals. Think about it, guys. Like, really. Sees Aussie GDP at 3%. Okay. So listen to all the negatives, and then listen to how the positives here. They have fiscal vulnerabilities. Believes that without remedial action, fiscal stance may no longer be compatible with countries' high level of external indebtedness. Negative outlook reflects that without implementation of fiscal policy decisions, deficits may persist for several years. Okay, sounds really bad. And then, to make things confusing, they said fiscal deficits will improve over medium term. Sees 2016 GDP at 3%, which is actually good. Unemployment rate has fallen from last year's cyclical high. Well, that's also good. Considers Australia's banking system to be one of the strongest in the world. Well, that's pretty good too. Right? So on and so forth. So I don't know. Thank you, S&P. Well, Nick says, should you short the Aussie dollar soon? I don't know. Where do you have resistance on your chart? So I'm looking at like Aussie yen daily. It hit the daily 21, dropped, made a lower low, dropped, right? And so you should probably, if you were a bear, at least set up the 618 Fibonacci retracement and to set up a possible lower high. See what I mean? So whatever you want. Yeah, the oscillator is becoming more and more overbought. Aussie yen on the 4-hour sure hasn't, it's trying to make a lower low, but keeps finding support, but it has not made a higher high. And therefore, the oscillator heads up overbought and wants to come down, right? So, it's one of those things. So would you short Aussie soon? Well, it's more like, what would you do? And are you a bear? What does the 4-hour tell you? Where's your resistance? Right? And that's that. I think there's going to be a secret meeting, the Bank of Japan on Friday. So what do you think? Sunday intervention? So this secret meeting, the finance minister of international affairs, the person specifically in charge of the Japanese yen, Minister of Finance, the Bank of Japan, and the FSA are going to sit down and talk about the international situation. Huh. Kind of sounds like they sat down to talk about intervening, huh? So anyways, what would these guys talk? What would they talk about besides intervention? Anything else going on? Blah, 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 blah. China has $3.21 trillion in foreign cash, foreign reserves. Is that a lot? 3.21 trillion? That sounds like a lot. So we did have meeting minutes yesterday. It's funny, they talked about it on Bloomberg this morning, and I'm like, didn't that just come out recently? And I'm like, oh yeah, that was yesterday. I'm like, it seemed so far away and so distant, like so much had already happened. And it was amazing that it was still on TV. I'm like, wow, really? Um, yeah, that was yesterday. The thing is, the world's changed since they had that meeting. So, like I said, the whole thing's going to be discounted. And I think that's probably how the market reacted, right? So that's cool. So if you remember, the Bank of England, their situation are that they face a lot of risk. Carney's probably going to have to do some easing this summer, right? And then the ECB had their little discussion, so they're ready to go on their holidays. They expect negative spillovers to euro, right, on Brexit. Uh-huh. Yeah, well, now you can go on vacation. Thank you for clearing that up. Yeah, could be a risk. Yeah, I don't know. Maybe. Yeah, thank you, ECB. Go take a break. Been working. Go take a break. Go take 3 or 4 weeks to like just relax. Go take a break, and when you get back, strike. And then when you're done striking, riot. It's the European way. Yep, it's the European way. Wonder why. Maybe that's the reason the UK wanted out. Could be. Could be a rabbit. Could be. All right, so we're about 3 minutes away. Bubble, we're 3 minutes away. Mm-hmm. 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 Boo boo. Boo 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 boo. Can't bear to look at that. Oh. How do I do this one then? Ooh. Ooh. What's the call? Cares. Uh-oh. Frozen. Life is a mystery. Is it done? Everyone must trade alone. I hear your voice, sounds like Wayne. All right. Yeah, I really don't care about ADP. ADP has no real impact on non-farm payrolls. There's no historical correlation. The only time when it was correlated is when all markets were correlated, and that had to do with the with Fed policy. So ADP, don't really even care. But it's a news event, and you can scalp it. It's a great scalping. Right? It's great. It's a great scalp, but who cares? You know, USD yen, Oscar Mike. So the headline is I'm on the wrong page. Sorry, 172. All right, great. 172. At least it wasn't 20, right? So remember, last month was it last month? It was 160. But anyways, okay. Let me give you the numbers. Uh, Hiring by small businesses is up. Medium businesses down. Large businesses down. Okay, that's interesting. Gold coming down. Now, I won't tell you why, but Daniel told me yesterday gold's going to come down. And he gave a very interesting reason why. And I'm like, I wonder if that's true. I hope it's true. I'm like, it's a very interesting observation on humanity. Oh, you're going to have to pay Daniel money for his alpha. It was a very insightful idea. So I'm like, I hope it comes down tomorrow. He's like, yeah, it's going to start coming down tomorrow. Here it is today. Boop, 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 boop. Like, oh my gosh. And by the way, I have called Daniel the most interesting man alive. This guy has been around. So when he says stuff like that, he gives a very interesting reason. You're like, huh, that's very interesting. Yeah, and all of a sudden it's coming down. I hope it's not a coincidence, Daniel. I hope this thing drops for 2 weeks straight. Another, and then I hope you trade it. that's that's the hardest part, right? So, anyways, we're more sideways action here. Very interesting. Just remember, I have it coming down, but I said doesn't even really have to come down, right? Um, this is the interesting part. It's still playing the support and resistance tickety boo. And there's our great nothing. Okay. Now, correct me if I'm wrong, though. We did talk, I don't know, at the beginning of the year, we did talk about it going back to 50 and moving sideways all summer. Daniel, you give away your alpha for free. So, anyways, that is what we talked about, though, right? No? All right. Because whatever you remember happening is what happened. Okay. So now rig count going up, supply going down. What does that tell you? Thank you, Miles. Miles says yes. I said that on all. So rig count. So let's do it this way. Okay. So if you were to do a supply curve, right? So rig count is moving to the right. So we'll go rig. Okay. So rig count shifts to the right. There's more rigs. So supply. So let's say demand is constant. So let me make demand a different color. Oh, this is going to get complicated. All right, fine. All right. So there's your demand curve. Demand stays constant. So let me put this back to black. Okay. So rig count goes up. So the supply curve shifts to the right. So the equilibrium price drops from P1 to P2. P2. All right, now the second part is inventories are drawn down. So the supply curves shifts back to the right. And we'll put it, so this is supply 1. This is supply 2. So now we got to shift it back to the right. Let's put it here. Ah! It's supposed to be here. All right. This is supply 3. And so let's put it, the new equilibrium price is here, P3. And what happens? We move sideways. You see what I mean? Rig count means prices go down. Supplies, inventory is falling means price goes up. And the end result is what? Up, down, or sideways in the market. Right? So hopefully you appreciate seeing that on a chart. Because that way it looks like it's not my opinion, right? Oh, he used science. Oh, well then. Well, at least I don't have like a big stick with like seashells and a monkey skull on it, and I go boom, price move sideways, and you're like, oh, well, it's magic. Can't argue with that. That would look good on my desk, though, right? Yeah, it'd look really nice, actually. So anyway, so I used science, so it must be true. So here we go. Let's take a look at the S&P 500. I don't know. You tell me. Do professional S&P 500 traders care about the monthly central pivot point? Or did they flip the whole portfolio at 2073? They're like, 2073? Oh my gosh, that's so psychological. I got it. I have to be long at 2073. And it's just a coincidence that 2072 is the pivot, right? So, yeah, I mean, clearly, traders are trading this, right? Now, what about a bear? What are you supposed to do if you're a bear? Where do you sell pivot points if you're a bear? At the beginning of the term. Okay, so it's the beginning of July. What do you do? Sell at M3. Well, this is monthly M3, and this is weekly M3. So it depends on what time frame you're looking at. But is it logical to think that if there are bears involved, that they may be watching these levels? Whether you're a monthly bear or a weekly bear, you might be at least watching these areas? Okay. And of course, if you're a bull, okay, if you're a bull, you're aggressive long. You're aggressive. Let's say you're insanely aggressive. Central pivot point. A conservative entry is M2. And this would work very well for me. This cluster here, okay? I would probably look to buy that at all cases. Now, when you see this cluster of weekly, monthly, it makes this look even more irresistible if you're already a hardcore bull, right? Yeah, Greg, we're in earnings season. Sure. More important to that, this volume and volatility is going to dry up. Never forget that. Don't treat this the same as everything else. No, we're going to lose volume and volatility. So earnings season, sure. Yeah. Good. Yeah, I don't. Again, Artem, weekly unemployment claims. We already know the trend in weekly unemployment claims. So I guess if it's way off trend going into NFP, but you know, oops. Okay, let me see if I can get. So ADP last month came out 173. By the way, it came out 172 this month. Okay? So basically, ADP came out, nothing changed. Nothing changed on ADP. Now, they did revise lower. So last month I said came out 173. Now they're saying 168. So a very minor revision. But remember, I don't think is there any sampling on ADP? There's none, right? But the employment situation report includes the household survey and the establishment surveys, right? And they sample a small, I think, to me it seems like a small data set, and from that extrapolate what the entire economy is doing. Holy vey, you could be way wrong on that, right? So anyways, nothing has changed according to ADP. I think that is really the important thing. So it comes down to whether last month's non-farm payrolls was just a numeric engineering statistical error, like somebody screwed up, and so they revised that up significantly. If that's not the case, though, then if nothing has changed in the economy, according to ADP, and I think that's what it's probably pretty good at, is that, it's all these small and medium-sized businesses that use ADP. So if nothing has changed, again, 172 this month, 168 last month. I mean, nothing statistically has changed. So if last month's non-farm payrolls wasn't a giant screw up, then it's going to be a low number again. So our time says, do you think tomorrow's NFP will be just as bad? Well, there's that thought process right there. But why don't you look at yesterday's ISM data, right? Why don't you look at today's Challenger report? Why don't you look at today's ADP report? And why don't you look at the trend in weekly jobless claims over the last, let's say, 5 to 10 weeks? And then tell me what you think. Yeah. Yep. So most people don't. They just throw out guesses and stuff. They're like, it's going to be better, or it's going to be way better. Well, I'm more interested in the methodology, right? So it really comes down to, I think, whether last month was a screw up or not, and how would I know that? Now, if you want a better, a better number out of me, then I would go through, I would model that out, and I'd come up with a number. Yeah, and that doesn't seem incorrect to me, right, Artem? So, yeah, using my technique, but again, so I think the government can totally screw up this number. And also, they change their formula often, so I don't know if I don't think they changed the formula. So they just got a bad sample, right? So they surveyed a few thousand people and said, oh, well, here's what it means for 300 million people, 350 million people, right? But if they got a bad data set, that's bad. So now if they've spent another 4 weeks getting better data, they might find, oh, you know what, things were not that bad. Okay? Or guys, or people delayed their hiring because of Brexit, for example. So if not this month, then maybe next month will be a big improvement. So it really comes down to what employers did. I mean, it could be right. So it was plus 38,000. It's not like people lost their jobs, but employers might be delaying hiring. But there's less people unemployed, so to speak. So whatever, let the numbers come out and then adjust your outlook accordingly. So Euro USD post ADP went up for a little bit, came down for a little bit, and nothing's changed at all. Gold gold stuck on a pivot, but not really going up or down anymore. Copper is still bearish. How does that make you feel? Dan? Let me look. I'm going to... okay, well, let me put it this way. If you were a bull on macroeconomics and you think demand for copper is going to go up because of it, we are at a role reversal, and I think, if I see it correctly, that's a monthly central pivot. It might be weekly. No, it's a monthly. So yeah, if you think things are going to get better, you're at a buying situation for copper. Whoop, whoop. No, Miles. What else going on? Dollar index at weekly central pivot. Oil we've done. S&P 500. You know, bulls buy here, bears sell there. So everyone's doing what they're supposed to be doing. We just don't know who's winning. Biggest loser today, Euro Kiwi. Followed by Aussie Kiwi. Wow, does that mean Kiwi's strong? And we had a Kiwi long trade? Oh, well, that's lucky. So Kiwi yen now up 1% for the day. Kiwi dollar up 1.25% for the day. So the biggest, bestest trade in the whole world is Kiwi long. Well, that's good because that's the one we did. So we'll see what these numbers do tomorrow. This chart will update. Must be the end of the week, man. I'm already tired. Yeah, it was funny hearing Bloomberg talk about the Fed meeting minutes. I'm like, didn't that just come out? Like yesterday afternoon was so far away. It seemed like a week or two ago. Well, I use Camtasia Studio, Dan, but it's a pretty slow process. It's a big, clunky, professional editing software, and it'll take you forever to make even just quick little videos and then encode them and then upload them and all that kind of stuff. So, but that's what I do use to answer your question. Stefan says, for a read on NFP, could you derive a good or bad number by looking at what the manpower? I don't know anything about the manpower temp agency, but um, yeah, no, I don't know. So again, I've published an entire report on FX Street on how to model non-farm payrolls, and then two different ways to trade the number. And if you want, let's see, I can Google this. I think it comes up first page, right? How to, what do I call it? How to something and trade jobs report. It was something, how to, can't remember what I called it. How to prepare for and trade the employment situation report. So the new version of their website got rid of the likes. It's had hundreds and hundreds of likes. No, there's no likes. Too bad, so sad. So that's that. So if you want to review the modeling techniques, that's that. Just seeing if there's anything else in the world to be worried about. Lots of currency pairs seem to be in between, right? You have Kiwi yen. It look, I don't know, it's near the psych level. I'm looking at pound yen. It's near the 4-hour 21. CAD yen is again near the 4-hour 21. It's not quite the right place to buy it. It's getting pretty close for sell. 101 is still finding support on USD yen. Maybe we should look at that one to wrap up. Do you really want to trade me? Do you really want? All right, so you can see you got the buy zone thing going on. Let's do it this one. Okay. So nothing's really changed. We got the psych level in there and the pivot cluster, right? So just, is there going to be follow through? Well, we need dollar strength on that. So we'll see. But it gave you the 618 yesterday, and the day before the test of 100. So whether you want it at 100 or whether you want it at 101, it just comes down to whether you want it or not, right? So does anyone want it? Yeah? So it seems to be in the right area. Bears are bears have there's two zones, obviously, if you're a bear, right? We got this one that we're facing now, and then we got the one above that, right? So maybe today we simply go up into here, pre-non-farm payrolls. Maybe. But it just comes down to whether you're buying or selling. So the sell zones are pretty obvious, and the buy zones have come and gone. But like, you don't have to be a rocket surgeon to figure that one out. So it just comes down to whether we get new money to follow through. So this is a 15-minute chart. So there are some. Let me change the color here. Let's do, I guess, red. There are some trading this on the smaller time frames that are buying these little dips, right? So it just comes down to whether they keep doing this or not. What? Fritz says he wants it at less than 100. Yeah, but this is what we were talking about. I don't know, was it yesterday or the day before? You got to be ready for the turn, even if it's not quite at the number you want. So yeah, intervention at 95 is great, but this is a reversal pivot zone, right? So it's possible it reverses there, right? So if you find yourself in this green zone on a Tuesday, then by Friday, the market very often touches the weekly central pivot. Okay? So, as I was explaining on a yen pair yesterday, you got to be ready to try to catch these things. Even if, I don't disagree with you. I'd love to catch like at 95, and I think we talked about that's maybe where Japan would get serious about intervention, but there's no reason why it can't reverse at the reversal zone. And by definition, this is the reversal zone. Throw in a psych level of 100, which is right here. You're like, yeah, yeah. So you got to, buy it, jam your stop. Because you never know, that might be it. Maybe it's not. It's probably not. But you still got to take the shot, right? Because you never know. Or certainly be ready if you find yourself here at 102, then you need to buy the next dip faux show, right? But all right, guys. Peace on earth. May the pips be with you. May your profits be above average. I look forward to reading your trade plans on Forex.Today. If I don't see you at Fixed Street for non-farm payrolls, then have a wonderful weekend, and I hope to see you again here at Forex.Today on Monday. So thank you for being on my team.